Welcome to the Gentle Ledger. Today is Thursday, February 5th, 2026, and the market feels like a moment when enthusiasm meets arithmetic. The story still compelling, but the numbers asking quieter questions. Now, let's turn softly to the U.S. indexes, where Wall Street closed decisively lower as investors reconsidered the scale and payoff of the artificial intelligence spending cycle. The S&P 500 fell 1.2% to 6,798.40. The Dow Jones Industrial Average dropped 592.58 points, or 1.2%, to 48,908.72, and the Nasdaq Composite declined 1.6% to 22,540.59. The Russell 2000 slid roughly 1.8%, reflecting a broad retreat in risk appetite rather than a single sector event. The tone was not panic, it was recalculation. Gently moving into the corporate highlights, the day's narrative centered squarely on technology and the economics of ambition. Microsoft fell about -5%, while Amazon dropped -4.4% ahead of earnings, both reacting to rising scrutiny over massive AI investment plans. Alphabet slipped roughly -0.5% after projecting as much as $175 to $185 billion in capital spending for the coming year, unsettling investors who suddenly wanted timelines, not just vision. Semiconductors and related names joined the retreat. Qualcomm tumbled -8.5% despite solid earnings, and Palantir declined -6.8% as software valuations compressed. Even beneficiaries of AI demand were not spared. Nvidia eased about -1.3%. Elsewhere, the tape offered contrast rather than comfort. Estée Lauder plunged roughly -19% on tariff concerns and weaker outlook, while consumer names like Tapestry and Hershey managed gains on improved forecasts. And in crypto-linked equities, Coinbase Global fell -13.3%, and Strategy dropped -17.1%, mirroring pressure across speculative assets. It was a day where optimism wasn't disproven, just priced. Overseas, in Asia and Europe, the mood carried across gently but unmistakably. Global equities moved lower alongside the U.S., with South Korea's market notably weak and European shares also drifting downward as investors absorbed the same shift in sentiment. The shared response suggested not contagion but consensus, a synchronized reassessment of growth expectations. In commodities and bonds, the story shifted quietly toward safety. The U.S. 10-year Treasury yield eased to about 4.19% as investors sought stability. Gold closed around $4,889.50, while silver dropped sharply by roughly 9.1% after recent volatility. Meanwhile, oil softened as geopolitical tensions eased and supply expectations steadied. The undercurrent was clear, risk stepped back, and balance stepped forward. Turning now to the newer corners of finance, in crypto land, the tone followed equities lower. Bitcoin fell more than 12%. Slipping below $64,000, nearly half of its peak from the prior autumn. digital assets today behave not like an alternative system, but like a more sensitive instrument tuned to the same emotional frequency. As the day settles into evening, let's rest in the reflective summary and outlook. Today's session was not about failure, it was about cost. The market did not abandon the future, it simply asked how expensive belief should be. Tonight, let that quieter understanding carry you into rest, attentive